value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. We're here, and we're Friday, and it's been an interesting week.
Bob, we have a couple of questions from our listeners we'd like to get to. Our first question is from Mike, and Mike wants to know, with all these people now switching from ordinary bricks and mortar retail to buying online, he's noticed that these online companies, apart from Amazon, but these online entities still aren't making very much in the way of profits. And his question is, if these online companies have pulled demand forward by many years for their services due to the pandemic, but they've shown even now they still have low profit margins, when will the public realize these online emperors have no clothes?
Yeah, Mike. Good sleuthing around and good question. And, of course, the out-of-box retail and into online has been going on for a long time. And when these trends get going, they're powerful. The main thing is that you had the 1929 crash, and I remember there was one group that made new highs in 1930, and that was retail. Don't know why, but just did. But on this one, it's always competitive, thin profit margins. But what we're looking at is this is detailed stuff within a major market forces, and we're going to look at the credit markets, in particular the yield curve, which last summer we went inverted, and as we pointed out then and continue, is on our chart on the yield curve back to 1857, every inversion followed by a recession. And then on this one, it inverted again in early January. And the last time you had kind of a double up like that was in 2007, a fateful year for the market. And it also happened with the end of the big bubble in 1929, and also in the previous big bubble in 1873. So the details of how the business is done in retail is always going to be fascinating. I think it's always going to be competitive, but it's going to be overwhelmed by what's going on in the credit markets. And yeah, the online emperors really do have no clothes. It just takes a certain kind of market to reveal it, actually.
And of course, once the American public is allowed to flow out freely and shop wherever they want, you expect there's going to be a huge boom with people really wanting to go to that specialty store they haven't been able to step into the last 4 months.
Yep.
Nothing like squeezing the Charmin. We have a question from Henry Solomon in El Paso. Should I even have to say Texas? Where else would El Paso be?
Oh, yeah. Or, as my Mexican friends say, Texico and Mexico. So I'm just showing off my erudition here, Jim.
Oh, yeah. Did you ever buy your gas at Texico?
Yeah, Texico stations, yeah.
Our question from Henry. During the next significant downdraft in the stock market sometime this year, would it be realistic to expect the U.S. ATF gold index to drop about 30%? I think that's what GDX stands for.
Yeah, GDX. Yeah, that's the senior golds. GDXJ is a good index as well. Yeah, Henry, timely question. We know that markets can be very positive in the May, June, even now period. And then if it gets overbought enough, and it certainly has, then we are looking for a correction into the fall. And how serious it gets, who knows. But yes, I think the downdraft in the big stock market would take down the gold stocks as well. The run lately has been outstanding, and one could take a little money off the table. But to expect it or even call for a gold stock index to drop 30%, yeah, we're not willing to kind of put that kind of a line on it. It's just that if some of your stocks have been and some of the gold have exploration ones have been fantastic, is just take a little money off the table and it's difficult to calculate a percent drop, but we will be there, of course, when the gold stock market is oversold and would be able to identify the buying opportunities. Thanks for the question, Henry.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, some people have described this as a gilded recession. Those who still kept their jobs are saving money. They're not going out buying things, going to restaurants, taking lengthy trips, and so on. And if they're buying homes or finding bargains, that expensive mansion down the street they always wanted is now more affordable, so they're buying it. Would you describe this? For the people who still have their jobs or other financial means, is this the gilded recession?
Gosh, that's a good phrase, Jim. And I think yeah. If you're making, it was the same in the 1930s. If you had a job, that was wonderful. And, but there were so many people out of work, as you know, in the States and various parts of Canada. Unemployment got up to 25% in that order. And this is, of course, is a contrived collapse of employment for political reasons. We don't know how well it was planned, but it certainly looks like China, they shut down things internally and for a number of days or week allowed Chinese to fly out of Wuhan carrying the disease. So, but once it got going and once the governments realized that they could shut down whole economies, this has been brutal. There are those who think that once the flu eases, we're going to get a V bottom. Well, we had a sharp break in the financial market, straight down and then straight up. So that was a V bottom, but we wouldn't apply this to the economy. The change in the credit markets, as we mentioned a few minutes ago, called for a recession, and we're in a recession. And those credit markers are not yet saying that the recession is over. So this is, one has to be very careful.
China's rent-to-riches dreams fade in fragile economy. If the Chinese government unleashed this, did they expect this to happen?
No. They had bubble markets, of course, and it was entrepreneurial for new landlords, and we've seen it happen in Vancouver for the last 60 years to build rental or fix up rental and make some money that way. But the headline is that those dreams are fading in a fragile economy. So the financial markets and the real estate markets are changing. So again, one has to be careful.
We'll have more with Bob Hoye right after this.
Do we want to do the headline about Victoria's Secret?
Oh yeah, we're getting there.
Okay.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, a headline that caught your attention. Retail chains abandon Manhattan is unsustainable. Victoria's Secret hit pretty hard. Well, I can just tell you from around my house, guys stop wearing pants and put on shorts, and women stop wearing their bras. That might be part of the effect. But I think retail chains that were depending on their pricey real estate downtown that they pay really high rents on being sustainable, it's no longer the case, is it?
Well, this was their outlet, Victoria's Secret outlet in Herald Square in Manhattan. And what got me, Jim, was the rent. Listen to this. $937,000 per month rent. I double-checked it to make sure I read it right. Now, that's a huge ticket to make each month. So, my gosh, and that's just for selling women's undergarments. Flashy. But then a friend of mine is a landlord here in Vancouver, and they've really helped their tenants. But he says now 30% of them are actually paying, and rather than let them go. But he says that in certain areas, people are buying consumables, but even those who have money have stopped buying special things, clothes or this, that, and the other thing, but they're buying consumables, which means food and booze.
Well, I'm in on that.
Me too.
Also, another headline, U.S. home prices climbed to record as people escaped tiny, cramped city apartments for the wide-open spaces of smaller towns and the burbs. Yeah,
people are leaving. Again, I know a guy who's been money manager, just a small office in Midtown Manhattan, and he has shut it down, and he lives on the Hudson River and is running his business from home. So people are getting very practical, and what I've always noted from history is that in a boom, everybody gets busy. And in a financial boom, stocks and bonds outperform everything, which they have. And then when it's over, it's over. And this might apply to the crazy politics that are going on out there, is that the political side of the spectrum gets highly busy as well. And strangely enough, it goes for the left. and they get very ambitious and very pushy. And then with the bust, and the bust is always inevitable, everybody gets unbusy. So whether you're a stock trader or this, that, or the other thing, or commodities or bonds or whatever, it gets less busy. And then even on the political side, over time, I think we can consider that the tide is starting to go out for the ambitious left. So we do, Jim, live in very interesting times, and it's sort of like a greater fool theory. You know, we use that in the financial markets, whether you're buying a stock or a bond in a hot market. You know it's overpriced. You know the trend is straight up. But the reason why the buying happens is that you're highly confident that there's another fool out there after you that will buy and bid things up. Well, also, I'm trying to work out a phrase, the equivalent phrase for in politics, where the left has gone absolutely mad, and there's the equivalent in politics to the greater fool theory. And these leftists, the Democrats in the States and liberals in Canada, about this coronavirus and shutting things down, really is one of the maddest of political moments. I wrote the other day that it's as mad as the height of the Russian Revolution in 1917 and in the French Revolution in the late 1700s. And the only thing, it's just as mad as those political ambitious creatures were then. But so far, the movement has not yet gone to state murder. But the Antifa and movement is destroying cities and injuring people. And like Portland or Seattle, the authorities told the cops to stand down. So, because they don't want these people voting them out of office. So cities are being destroyed because of perhaps the greater fool theory in politics, where it just goes to a form of madness. And it'd be interesting to see if we do get a serious correction in financial markets in the fall, if the energy of the rioters diminishes. So, be fun to watch, Jim.
My guest has been market historian Bob Hoye. By the way, Bob, have a great weekend.
Yep, you too.
Bob's the chief investment strategist for chartsandmarkets.com. He loves answering your questions, so you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Have a great weekend, everybody.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.